Good morning. Hoofa. Hooah. 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 I'm going to monetize this. It is, if you're just tuning in, it is Tuesday, February 20th. Just so you don't go on and listen to an episode that is old, because we don't want that. I got a new thumbnail. Hopefully you guys are finding me. I know I'm okay. We're going to turn on a morning, Joe. I was just responding back to I comment on an SMCI article and the hate is strong on Seeking Alpha. Boy, people don't like God, I mean, morning, Scott. Why do people, I mean, what I don't get is, and Seeking Alpha is far more civil than most places on the internet, but man, there's a lot of hate out there for this. And I found out the TrendSpider store isn't open yet, so kind of excited about that. Let's go to the market scanner, and we're going to do some scans. There's probably not a whole hell of a lot coming up, but XOM, CLF, let's hope Brittany bitch gets on the live today, because the show's dedicated to him, because he was super nice. Everybody's super nice that hops on the live session, though. Let's see. You. And then view channel. We'll go there. Ooh. Daddy gets paid. Because I just saw a commercial. Morning, John. Haha, Brittany bitch is here. I knew you'd show up for this one. I was sitting there with the dogs on Saturday, and I was like, let me go back and do this, because I want to make sure people know I listen. I am very happy when people. The tips are what make me happy, because, or I should say, gifts for IRS purposes. Because that way I know that you make money. But the response on Alpha Picks was fairly big, so it's been a good month. So I can go without naming some affiliates for a couple of days here if we wanted to. CVX, PXD. Energy seems to be picking up steam. Levered ETFs, let's see. Morning, Mike. Mike's been super generous over the 6 months he's been listening. 8 months. So you're getting an episode dedicated to you, Mike, as well. At some point. You don't have to add any more, but we'll do a affiliate free episode dedicated to Mike as well. I'll go back, and maybe anybody that has tipped, I'll do a commercial free sponsored episode. See, limited ABFI, which is interesting. mRNA, Royal Caribbean. You may get it anyway, Mike. I know there's no need. Look at the Dow. Man, there's a good amount, more than I thought, had cross-ups. Verizon. Morning, Mark. CVX. Don't want. ROP. What the hell is ROP? Roper. The only Roper I know is Stanley Roper. From Three's Company. O'Reilly, that's been too hot. Cognizant. I mean, the problem is finding stocks that are good stocks that haven't run. And in this market, it's becoming tougher. I have a couple. Morning, Pavin. Philip Morris I won't do. Danaher. That's... Citibank. I like this one. I still like this one to run long term. That's a good one. Capital One. God. I mean, it was down 3.18%. I don't think that's a bad play, to be honest with you. Target up at 150, probably on the back of Walmart earnings. Duke Energy, Bank of New York. This one keeps going up. God, let's put that one in. Okay. And that's it. Now, let's see. What we really want to look at, and what I probably should start the show off with, is this. And we're going to look at data extended. And we're going to go to a 5-minute. I don't expect this to hold up. I mean, it's up like 3% in pre-market, 3.2%. I don't expect that to hold up. We've got some pretty big downside movers. Intel, I still hold $25,000 worth. That means I'm going to start. Okay, here's what I'm going to do. I'm going to start. Let me start opening up. I was fighting with people on Seeking Alpha if you're just tuning in. Arguing, well, debating, I should say, not fighting. It's debates over there. Or it's not fighting. Dan's funny as hell. I'm going to close this down. Arista Networks I want to get into. Twilio I want to get into. But let's see. Did they go back on their pricing? I think they probably did. Oh, offer extended for 1 day. Offer extended. I'm not going to bring that up. So we're going to close that down. We're not going to bring this up, so we're going to close that down. I am going to bring up Linktree. I'm going to redo the Linktree too, a little cleaner. I thought that was a good. By the way, if you haven't read this newsletter, if you're not signed up for the newsletter, sign up for the newsletter, because this special one that I did, PSTG, which Brandon wanted me to go over. And Brandon, just so you know, I won't go over it in the episode as deeply as I did here in the newsletter. I'll kind of go over what I said in the newsletter, but there's a couple of other things that I'll show on this one. But this is a blueprint. Everybody says, you know, when I say, hey, do your own research and do your own work, that's a blueprint for how, you know, I didn't know anything about Pure Storage. Oh, NVIDIA is just, you know, I'll bring it up. It's coming back. I think we see a 600. Oh, thanks. Yeah, I was Brendan, and I know you're a paid member, but that's kind of emblematic with the amount of effort and work that I put into the paid ones. And you know that, but hopefully people understood that. I did get a few people who got paid upgrades. Okay, so we'll go in here. Okay, let me start opening up some links that I have. Here's one link. Capital One nears deal to buy financial. It's actually to buy financial. Pavan, you asked about that one. Morning, Dan. Morning, Evan. Pavan, I think you asked about this one. And I told you, the problem is when you have news, it's in the market. Morning, Rabbit Badger. And when you have news, it's already priced into. By the way, look at your Lunar this morning. Pre-market up 22%. Let me look at SET. Because SOUN is one. Pre-market up 6%. This one could be big still. Growth is fading away. Keep clear. Hey, Diane. Everyone's late to the party, Diane. You're not so late. No, I don't want to follow. I'm going to keep that one for later. I got to do more research into that one. Okay, so Capital One we've got. Notable earnings after the bell. Home Depot beat. Let me see if I get a bunch of pop-ups on here. CNBC still has some of the best earnings roundups. $149.99 for 6 months. They keep cutting the effing price on this. I mean, it's got to be just the Jim Cramer's hype is down and top AI five AI stocks. We'll open that one. What's this one? There we go. Okay. Biggest stock movers of the day. Wah. Three stocks I can't wait to buy on a dip. SOFI insider buys. I've got my pre-market. Good view on Google. Why it's vulnerable. This is a good. I think it's Brad Altimer from Brad Gerstner from Alt Capital, and the two bills BG2. It's a great video on. And I'm going to bring up for you options folks. Edward, who's new to Substack, Edward Corona. Follow him, the Options Oracle. Get his newsletter. He's now, mind you, he's very new. I mean, I just started following him. He and I have kind of traded some emails back and forth. He makes me want to get into the options trade. FOMO. Because he's been doing so well. So well. This is interesting. Yeah. Okay, we're going to... I want to get it to the place where... I mailed in my company a postcard a few weeks back requesting information on penny stocks that had huge upside potential with very little downside risk. Does that ring a bell? Oh, yeah, I may have sent some. Okay, great. Well, reason for the call today, John, is something just came across. We'll play that one. That's such a good one. Yeah, here's Pure Storage, and I wanted to go down. Okay, we'll go down there. And that's it. Okay. And we got SMCI in the pre-market kind of going down. You're welcome for the Pure Storage one. And it's kind of, again, you don't have to have... We're doing this so that I don't announce affiliates on the podcast, but I will tell you guys that are joining right here. This newsletter was basically, hey, when you asked me to look at a stock, I'm not doing it justice. When you are asking me, hey, can you look at this? I am doing a 30-second look at a stock. This takes 2 to 3 hours to actually write up and do. That's where you get the benefit of getting into a stock. And again, to trade it, that's one thing. You don't need to go through all of the, the stuff that I went through, all of the fundamental analysis. You don't care on a trade. You don't, again, if this is a day trade, triple levered ETFs, you don't care about the fees on triple levered ETFs. You don't care about that stuff. It's more about the technical analysis and the chart. So my goal on this podcast, though, is to make sure that you have stocks that you won't get burned on. Lunar with Brandon has. You may get burned on that one. SMCI. You very well may get, but there's a reason SMCI isn't in the core portfolio. Or is it? Did I put it in there? Yeah, I think I did. I did put it in there. It should probably come out, to be honest with you. But the good news is SMCI may have grown so much. What I'm reading is you may have an opportunity to get SMCI bumped into the S&P 500. That's the crazy part. So, but yeah, we'll go over more stuff with that. Okay, I'll be right back real quick. Okay. Let's start this mofo. How am I going to start this out? Okay. We're going to start out here. Okay. I'm going to hit record. I think. Let's just make sure I'm okay. Dan got into Lunar last week. It's not a bad trade. I mean, you know, again, it's kind of like IONQ. I'm an IONQ. It's not a horrible trade, but it's not an investment. I would warn you, you know, and the comment from My Weekly Stock, he was funny because I guess he read the whole thing. But my comment down here is, the conclusion. I will never tell someone to buy, and I will also never tell someone to sell. Buying and selling are absolutely personal decisions. Also, every stock can be traded. A stock isn't a marriage proposal. Sometimes it's a Tinder date. And I was going to say Tinder hookup, and then I'm like, my mom reads this. So make sure you know that before you buy anything. You have to know what a stock is before you buy it. So, but I think I'll start out here. We'll start out here and then we'll go to SMCI. Because I think I have... Okay. Morning, Scott. Okay, I'm going to start. Good morning. It is Tuesday, February 20th. Happy day after President's Day, and I do have an announcement. You will hear no affiliate pitches in this episode. None. I may bring up Linktree, I may say TrendSpider, I may say Seeking Alpha, but you will hear nothing about those things other than the tools that I use. And the reason is because Brittany Bitch, and we lovingly call him Brittany Bitch. His name is Brandon. He was so generous on Friday with his SMCI play and other plays. He sent me a nice Venmo, and he was so generous that there's no reason to do the pitches right now. Hold on. Ugh. You son of a bitch. Why are you... No. You're standing there crying, okay? Oh. I yell at the dogs lovingly. So you won't hear those pitches. He did ask me. I said, "Hey, you get one. I'll do a deep dive for you on Tuesday about a stock." And rather than do a deep dive, what I did was I wanted to provide something back to the listeners and to the community that isn't paid for, that is 100% just out there. And the President's Day special look. Pure storage, and it's a blueprint. This is a blueprint for how you look at a stock. When you ask me to look at the stock, when somebody comments on Spotify and says, "Hey, can you look at this for me?" Go and take a look at this newsletter, because this shows you the tools that I use, which are FinViz, which is free, which is Seeking Alpha, which is the majority of it free. Which is TrendSpider, which is charting, which you can find free charting for free through your brokerage firm or whatever. Thinkorswim, Webull has a free desktop software that you can use. Any of those things, they all have charting tools that you can use. But understand, this is the way you look at a stock. When somebody tells you to go do your homework on a stock, this is what you do. You look at the fundamentals and you look at the technicals. That's what I do. So it's enough to do that. Pure Storage was his stock. You can go and read about it. My Weekly Stock commented he liked my conclusion where I said, "Hey, a stock isn't a marriage proposal. It can be a Tinder hookup. You just don't know which one. But you have to decide which one it is." So yeah. I thought it was a great newsletter. Again, it's free. The paid newsletter. It's an example of what I do in the paid newsletter, is showing you exactly what I do. The paid newsletter on this weekend was mainly about SMCI and how I traded it. I'll leave that one to the paid newsletter folks. But in pre-market, we're up 1%. It does look like we're putting in a top at about 830. You are getting into the 700s. I would wait to see what the market does when we open up. This will change minute by minute. That when it got to $1,000, you saw a sell-off here. I sold out in my IRA account. I did not sell out in my brokerage account, but I made so much in my IRA account that I am 100% in the profit, even if this goes to zero. And FYI, it's not going to zero. One thing I do want to point out, by the way, that goes along with that newsletter is when you go in and you look at Seeking Alpha and you look at Pure Storage, there's a ratings here. And when you look at the quant rating, the Seeking Alpha analyst ratings, the Wall Street analyst ratings, under the Wall Street analyst ratings, there's a really good tool, a chart, where you can look at the current price target. And it goes back a year. And you can see the low price target for Pure Storage is 35. The high price target is 58. And the average is 42. Where you're trading right now in pre-market, you're at 41.95. It's down about 3%. You can look at the price target versus actual price in a graph form for 5 years, 3 years, 1 year, 6 months. You can look at the analyst history, how it's gone up. You can look at the recommendations over 3 years. So there's a lot of tools in here, and one that I probably should have included and didn't include in Seeking Alpha was looking at peers. And the peers, Pure Storage, it has Logitech. Don't know that that's really a peer. Lenovo Group, might be a peer. Western Digital, absolutely a peer. NetApp, absolutely a peer. And Seagate, absolutely a peer. What's interesting about it over 1 year is that Logitech, which I don't know if it's a peer, actually is up the most over 1 year at 47%. We can look at total return, which is basically includes dividends and stuff, but I don't think any of these really pay a ton of dividends, but you can see Logitech over 1 year up 50%. Pure Storage is up 35%. You can go down and look at the rating analysts. You can look at the sector rank in information technology. You can look at the quant factor ratings. There is so much in this Seeking Alpha that you can do and do research. I just included some of the top level stuff, but I thought that was important to say. Now, when we talk about SMCI, this is the scene that I want you to be aware of. This is Leonardo DiCaprio from The Wolf of Wall Street, where he's a telemarketer. He's calling up, I don't know, the guy's name is Michael. Michael?
It is perhaps the best thing I've seen in the last 6 months. If you have 60
it is
seconds,
a penny
I'd like
stock.
to share the idea with you. You got a minute?
Watch that scene. I'll include it in the newsletter. Watch that scene. Insert SMCI. Insert SMCI. All you have to do is insert SMCI, and you'll see it. Again, it's kind of down from where, 8:30. We don't have confirmation. It's kind of moving down. From a 4-hour standpoint, you're still in. Let's run the 4-hour algorithm. 4-hour algorithm does not beat buying and holding over the last 2 years, but you're still in. There's moving averages in the 4-hour algorithm. It doesn't time the top, doesn't time the bottom. It plays in the middle ground, and it's a nice, safe middle ground. You win 52% of the time on SMCI, and boy, this particular time was a nice win when you got in at 318. Because if you got out where I got out at, even you got out with 179% gain. That's a nice gain on this one. So SMCI, keep an eye out on it because one of the things that I wanted to look at was seasonality on SMCI. If we look at let's go back. We're going to go back on seasonality to 2007, and we can look at the week of the year. This week, if you go back since it debuted, is the weakest week of all. Well, there's a couple of 20s in here, but it's one of the weaker weeks. This is a minus 10% at 8. I mean, it's not a very good week for SMCI. So be aware that there might be some pullbacks on this. I do think that SMCI, by the way, in my mind, I think SMCI actually provides you a fairly good opportunity even at these levels. I was just debating with somebody on this. But SMCI heading into one of the worst performing weeks since the company went public in 2007, 31% win rate. It is all about NVIDIA earnings, all about NVIDIA earnings. And that's the key. SMCI newsletter says it all, but interesting note, with valuation concerns top of mind, note that SMCI insider purchase bought shares at 40 times multiple. That's the one. I guess I don't have the SM insider purchase. Let's go and look at SMCI here on FinViz, because what I want to show you is the insiders, because we always talk about insider selling. This is insider buying, February 1st. Dude bought at 568. Dude bought $1 million worth at 568. Now, this guy on February 14th, one of the SVP worldwide, he sold for a $25 million gain. 25 million. I mean, that's for somebody in a mid-cap company, a senior vice president worldwide sales, to sell at 874 on February 14th. I think they're outside of blackout right now, or periods where they can buy and sell. I don't think that there's anything. But for this guy to buy at 568 with $1 million, he's kind of, probably knows something. The 649, $1 million, SVP George Ko, he exercised his options and he sold about a quarter of those options for $1 million, just protecting himself. This same dude exercised 28,000 options and then sold out. I mean, he sold 28,700. He basically took his 25 million. He's buying his house in France. He's retiring at this point. But yeah, SMCI. Remember, the average target price is 745. The most recent is 1,040. This is just somebody chasing that stock. I don't think that the forward PE at 27 is crazy. I do think that the PE at 62 is crazy. I think this depends all on NVIDIA earnings. 100%, I think the entire market this week relies on NVIDIA earnings. One of the things that I saw that was that I thought that was interesting was from the On the Tape podcast, NVIDIA calls, and I don't know what the call levels are, but NVIDIA calls for the upside are selling for about $18. I think it's $800. They're selling for about $18, okay? Puts on the downside to the 600 level are selling for $9. That means a 2-for-1 betting that NVIDIA moves higher on the earnings. The risk reward may be good to play to the downside, because again, this is the valuation is crazy. You can't. I would never bet on the downside on this one personally. Who's betting against it? Because the reward may be incredibly beneficial if they, if they announce something crazy. Now, this earnings back in November, strong earnings. You went from 498 down to 475 over a period of time. This one could do the same thing. This earnings, you've run up so much. This earnings period could do the same thing. For those who want to know about option plays, I found a newsletter, the Options Oracle, Edward Corona. He is fantastic. And I was just saying this, he makes me want to get into options. He's new. He's posting everything that he does, all of his wins, his losses. I think he's a good newsletter to actually subscribe to. I liked him a lot. So I'm pumping him up a little bit. Hopefully you can say, hey, Deli Stock Pick sent me over there. The two Brads, Brad Gerstner and Brad, I forget his name, but Bill Gross. I think it's Bill Gross. I forget. But Brad Gerstner is Alt Capital. They go over Google's susceptibility and the vulnerability of Google in this AI market. This is a 2-minute and 35-second video. I think if you want to listen to the whole podcast, I think it's fantastic. But understand, Google does have some major issues. I'm in Google. I haven't trimmed Google. I do think that 150 was probably a good price to trim Google. It's at 140. I would say 130. Anything in the 130s, I think you can buy safely with Google. I mean, look at the MACD is down. The RSI is at 35. If we are in a bubble, Google has enough cash to make it through. I don't think their valuation is that crazy. But one of the things that Google relies on, and Google is 100% reliant on search revenue. And that search revenue, if that search revenue for some reason comes out of this business, you are susceptible beyond belief. And that's where this valuation will get dinged down. The forward price of Google is 18, but they're spending more money. So if they're spending more money, they're making less money on search because it's going other places, mainly Bing or Copilot or ChatGPT, or even God forbid, Apple comes out with some artificial intelligence on your iPhone that creates Siri as a search engine. I mean, just kind of thinking about it, that's where Google is susceptible. I know a lot of people have asked about SOFI squeezing while insiders load up on the dip, paying insiders actions on your charts. This is part of what you can do on TrendSpy. I will not show it here. I don't have that set up, but it's an interesting one because if you look at SOFI, the insiders are buying on the news. It's a good option to put on your TrendSpider charts. I don't have it. TrendSpider, you're in here at 819. The algorithm actually makes you 0.1% over the last 24 months. That's pretty damn good considering if you bought 24 months ago, you're down 32%. Long term on this one, I do think it's a $10 stock. I think it pops on hype. I think you get to $10 and then you sell it. Look at this. I mean, this is $10.29 right here. If you go to $10, let's just put in a line at $10. We'll put in, let's see, where's 10? Right here. We'll do it right here. $10, boom. Right here. $10. See how it gets up there? Rejects off. It'll get up there again. So, again, part of the thing of this podcast is let me give you ideas. It is expensive. I don't think that this one's going back down to 4, but financials, if we take a hit, if something absolutely, crazy happens, it could go down there. 3 stocks that I can't wait to buy on a dip. Before I bring that up, let's go to Seeking Alpha because there's a couple of changes in the email that I got this morning from the core portfolio. Netflix moved from a hold to a buy in the quant, and I thought that was interesting because I am a big believer that Netflix is going back to 700. The quant has it as a hold, but it will move to a buy on open. Taiwan Semi moved all the way from a hold to a strong buy. From a hold to a strong buy. Trade carefully along the semiconductor trade. This one, again, is reliant on NVIDIA. So I don't know that I'm necessarily buying it. It's ranked number 1 out of 65. I hold Intel, a large amount of Intel that I'm hoping to get back to even on. But I am thinking Taiwan Semi, I don't think it's a bad place to buy right here. I really don't think it's a bad price. If you go to ratings and we go to that Wall Street analyst and we get that nice little chart that you see, you can see the low price target is 100. The average is 129. The high is 160. You're trading at 126. So you're trading on the low side of that. So I still think it's a little bit good here. I think it's a little bit good. So, that's one thing. Ratings downgrade, FBCG, which is the blue chip growth. I thought that was interesting. 3 stocks I can't wait to buy here. They are CrowdStrike, ARM, and Palantir. CrowdStrike, tend to agree with. Palo Alto Networks, we'll talk about that. That's after the bell today. ARM, I would wait until March 12th, to be honest with you, because if SoftBank unloads their shares, you are in for a world of hurt on ARM. Palantir, I completely agree with. I completely agree with Palantir. If you want to read that article, I will include it in the newsletter. I included this because some people have been asking me about gold. Why would you ask me about gold? Again, this is August 10th, which is my birthday, 2020. Why would you ask me about gold when Bitcoin's up 333%? If you want your money in gold, you better be sitting in a rocking chair in a retirement home. and trying to protect your capital. If you're nervous about the markets, gold may be a good place for you. I was just reading about silver. Might be a good place for you. But yeah, I don't know why you'd want gold when there's so much growth out there that's available for some of your cash. Take 5% of your cash and throw it into Bitcoin. You can set up a Coinbase account. You can get Bitcoin in the ETFs right now. So there's no reason not to do it. Here's the Bitcoin average return by month since 2016. Notice February, 13.11. Notice March, minus 60.6, minus 0.6. April, one of the biggest months at 14%. I think the halving's coming. I don't know anything about this stuff, but I understand it's usually bearish for a halving. One of the things that I heard on a podcast, and I think it was The Compound with Josh Brown this weekend, was when they were talking about Bitcoin. I always thought, hey, there's no more Bitcoin being printed, and the scarcity argument is there. And remember, the markets trade and Bitcoin trades on supply and demand. There's very little supply that's actually traded on Bitcoin. And even with the ETFs that are coming in, the supply actually gets smaller because they start buying up the Bitcoin. So there's very little. The scarcity is not a reason to play, because if Bitcoin is that good of an asset, kind of a wealth holder, then there's going to be Bitcoin 2. There's going to be Bitcoin 3. The blockchain will just be copied, and you're going to have other ones. Now, Bitcoin's the big daddy of them all. I think it's interesting. It is what it is. Biggest movers of the day: Discover Financial Services. Capital One bought Discover. The price. Pavan asked about this one. I'll include it in the social request. It was already priced in. I think it was up like 10% in pre-market. And they announced it pretty freaking early. It may have been announced yesterday. But one of my points about that is, hey, I heard this news story. Blah blah blah. It was in the markets. One that wasn't in the market, but it was rumored by the Wall Street Journal last week, and I brought it up around Roku earnings, was Vizio, VZIO. It was confirmed Walmart buys Vizio for $2.3 billion. It's like $11 a share, and it's trading at $11 a share. So, hold on, dog's crying. Come here. Hey, come on. Come here. Hey. I'll put your bed in here. Okay. Come on. Hey. Daisy. Come here. Hey. Go get your ball and you can bring it in here. Oh. Good SMCI morning. Okay. So Walmart announced earnings. They did really well. But Vizio, they bought them. It was announced. And that was a nice move, because Friday that was trading at around $9. But yeah. Here's Walmart in pre-market up 4%. Target's up a little bit. But yeah, it's a good one. Home Depot beat top 5 AI stocks. I saw this one. This was really good. Top picks are NVIDIA, AMD, Palantir, SMCI. Spectacular gains. This guy in this article goes over everything. If you want to read that, I'll include it in the newsletter. Home Depot said quarterly sales declined. Their revenue was declining. Everything. Home Depot is not doing that great. It had quite a run. I think it was at 300 and it ran to 320. So it had quite a run. But yeah, 282. I mean, if you got in on this in the algorithm here at 282, I don't know that I necessarily would have sold out of there, but that's 28% in 107 days. So you run up that much, you're going to come down. It's 2.41% down in the pre-market. There's no way you're doing earnings that are that good. It's all-time highs. So that's the problem. Come here. Come here. She's not coming back. She went to work. Not everybody can sit here. No, come here. Come on. Come on. I'm not playing ball with you. She's got her ball and she's crying at me. I'll get to ODFL. Ugh. Splits mean nothing in this market. Come on. Daisy. Daisy. Oh, now I got editing to do. Mother effer. Where was I? 5 stocks, earnings, Home Depot. Okay. Home Depot. Yeah, it is what it is. Great stock. It's all-time highs, I think. Yeah. No, all-time highs are back here at 400. So that was 2011. Trading kind of like a tech stock. But you're seeing this channel right here. I would say, look at that right before the highs right there. I would say this is the channel that you're looking at until it proves that it can make its way and hold it above here. I think that's the channel you're looking at. So, come here. Hey, get over here. Come here. Daisy. Get. Go. Mofo. Okay, Home Depot. Okay, I've had to edit this, so if it's chunky, my apologies. But Home Depot, I think that's it. I'm not bringing Daisy on. She sits there and cries, and she has the ball in her mouth, and she wants me to go play with her. Notable earnings after the bell today. You've got Realty Income, and I do have a couple of REITs that were interesting that they brought up. Cousins, Alexandria, and Kilroy. These are trading below their price targets, but they've had significant earnings. Realty Income, if we go and look at if you've listened long enough, you know I'm not a fan of REITs. I think they give away the profits in dividends, and they tend to have to spend their capital renovating their properties and doing that sort. You are getting, 5150. 5150, for those of you that don't know, is a classic Van Halen album. But I don't want to time the bottom. You have some confirmation. Doesn't seem like a huge amount of confirmation. Your 50-day looks like it's still going to have a death cross. So I don't love that one. I don't love that one playing into earnings after. Teladoc. This is it's a super expensive business as far as the multiple goes. Kathy Woods was big on this one. I just think it's copied easily. Now the algorithm loses you 49%, but you lose 70% if you buy and hold. So if we look at a weekly, there's no reason to buy into this stock. They're still losing money. Nothing. So I have no real interest in owning that one. Palo Alto Networks. This is the one that I think you should absolutely 100% own. But I don't know that I'd necessarily buy this going into earnings. Again, look at the strength of this one if you bought it. I'm going to remove all annotations on PANW. The MACD is high. The RSI in no man's land, but it's coming off of a super oversold. Their earnings are coming up. If we look at this stock, and again, this is cybersecurity. So between this and CrowdStrike, those are the two real names that I think you can own. Fortinet is one, but it's It's an older company. It does make money. It's not bad, but you trade that one. Zscaler is one that could be a huge one. The PE on Palo Alto Networks is 207. The forward PE is 58. The average target price is 355, and you're trading at 366. The most recent coverage, Bernstein said outperform at 402. If we go down to everybody's selling. Everybody's selling in big quantities. A director sold 25 million. EVP of Chief Technology Officer sold $12 million on February 1st at 338. They're selling. This dude sold out 36,000 shares at $338, and you're sitting at 366. So it's a little bit, it's hard to say buy into this one. I am holding this one. I am not looking to get rid of it. It could become very cheap. If we look at this one, let's go to a new one because I do want to cover one more. Seeking Alpha, if we go over here and we look at PANW, by the way, for those with Alpha Picks, there's a new video webinar out where they go over their portfolio and stuff. But here's PANW. You can see the valuation is an F. They are ranked 22 out of 46, which is information technology in their sector. So it's not quite cybersecurity. People also follow Fortinet, CrowdStrike, Zscaler, ServiceNow, and Salesforce. Those are the ones that they do. This guy says Palo Alto Networks still has gas in the tank, an earnings preview. He thinks that it becomes cheaper. If you go over here to the Wall Street analyst and we look at this, you'll see the high is 405, average 358, low is 241, and you're trading at 365. I mean, look at the 5-year. Palo Alto Networks, this is the actual price versus the price target. The price target is 334, 353, and you're trading at 366. Look at the 5-year. It trades right underneath that. It's now over it. I'm slightly concerned heading into this. I'm not trimming my stake. It is in a retirement account, so I could trim it. I'm not. If you look at the summary and we go and look at the sliders, I love these sliders. The 52-week high is 380. I think with a good earnings, I think you get back to 380. Do I want to buy it and chance that? No. I'll wait because if the earnings justify $380, then you buy it at $380. But you don't buy it at 366 thinking it's going to 380 and all of a sudden you're at 300. Because if the earnings justify a $360 price, then it's going to trade at 360. I just don't think this one is good enough to actually play into earnings. Now, one that is interesting for me to look at. I am not getting back in. This is a scar that still isn't healed. Sedge. Sedge at 74, great trade because in this little bit right here, you have made 23% in about 28 days. Solar is on fire. Solar is coming back. Higher for longer. Killed this one, but it's now on its way back a little bit. If we go and we look at Sedge here, again, this wound is, if you guys don't know, I had a nice 10, 15% earnings in like 3 days on this one around a pop on earnings or something like that. And then I held on to it. I think I wound up losing like 60% on this one, 40%, somewhere around there. And the CEO came out and said, yeah, we just don't have demand. This is the problem. The revisions, the momentum, everything about this is a problem. 1 year, you're down 72%. Year to date, you're down 11%. But if we bring that in, 1 month, you're up 15%. 5 days, you're up 5%. It has been a super, super mover. If we go and relook at the ratings on this one, you can see the quant history. Quant right now is a hold. If we go to the Wall Street analysts, we can see the price target is upside of 80. Price target is 88.91, $88.91. Look at that. But look at the price target drop. So do they have a real clue as to where this one should actually be trading? I don't think so. And that's the problem that I have, is that when you look at the recommendations, look at how big that yellow has come. So this one is uncertain. Your average is 88.91. If we go and we look at the Seeking Alpha analysts, they have a buy rating on it. So you can see buy, sell, strong buy, hold, buy. It's all over the place. I don't think that this one's good to trade on earnings either. Again, we're 1 day away from NVIDIA, which is the biggest earnings of the year. If you want other earnings, they're all in here. You can see this one in here. Capital One to buy. And let's go over the social request. Gilead Sciences, GILD, I think is the symbol. This is from Perry on Spotify. Gilead. I'm not a big healthcare guy. XLV has been doing well. Your downside, I mean, look, you had your earnings. Why would you get into this one? That makes no sense to try and, time the bottom on this one. Gilead Services, I know nothing about the product, but that chart doesn't make me want to invest in them. Now you're at your 200-day. What has happened the last couple of times you've been at the 200-day? You've broken through it. So there's no reason to think that this one may not come down to 61. There's no reason to get in. Mark Gundick from Spotify wants me to look at ARM. ARM, and I said this before, ARM, you want to wait until March 12th. You're seeing the MACD is crossing over. Boy, if you use the algorithm and got into this, you are benefiting. You have no confirmation right now. I wouldn't get in. This is 100% hype. It is not worth this amount of money. Not worth that amount of money. Salpy from Spotify asked me about Arista Networks, ANET. I went over this one pretty well last week. I like this stock. Am I getting into it right now? No. It's had its earnings. It's had its hype. It is on the underside. Algorithm has you out after a nice 8% gain. The algorithm makes you 73% over 24 months. If you bought and held, you made 103%. You win 55% of the time with an average win of 11%. That's what a bull stock does for you. It makes you win. The algorithm just provides you some safety. Right now it says out. I trust the algorithm. The MACD is quickly heading down below the oscillator. What does it do when it gets down below the oscillator and the RSI is down? Well, last time that was at 199 after the earnings. It shot up. I think we probably pull back to about 250. If we break 250, you're getting down to the 230s. Now, the actual, if we go over here and we look at Seeking Alpha, because I'll pull it up here on Seeking Alpha, ANET, ANET. And I know I've done this. So hopefully you're on the, it's a strong buy in the quant. The valuation. I mean, it goes back to, this is an AI play, 100% network marketing. Network. It's an AI play because they're putting in the servers. So it's number 1 out of 46 in information technology as far as the quant goes. It's a solid stock. And we're hearing the dog. I am ignoring you. I am not paying any attention to you, Daisy. If we go to the ratings and we go to Wall Street, oh, isn't that fun? She's trying to get me to play with her ball. You can see average, the high is $330. Okay, she's gotten me. I gotta stop. No. What? Did you put it under the table? No. There's nobody here. Nobody's there. Nobody's coming. Come here. Get in here. Hey, get in. Okay, I'll be right back. The dog has to go out. yourself stress. I know. Are you okay? Okay. Okay. Okay, I'm back. Poor little puppy's having seizures. She had to poop. Hold on one second. Daisy, come here. Come here, little girl. Come here. You want to go under? Want your bed? Okay, hey. Come on. Come on. You want to come under? Are you just trying to get sympathy? Are you okay? Are you okay? Oh, look at this. You seem okay. Come on. Come on. Hey. Okay. You want this? Hey. Come on. Come on. There you go. There you go. Okay. She's under her blanket and fine. Okay. Okay, sorry. I don't know where I left off. Poor little puppy had some seizures. So we were outside. She kind of alerts me to this. But you can see the upside. It's right now trading at 255. It's down a little bit. Market opened up. My guess is that we're down. But ANET, yeah, price versus actual target. You can see it's kind of up there. It's moved up. The price target has chased it up. So I like this. I'm looking to get into it, Salpy. I think it's a good one. Brady Ossiger, IOVA. Well, and he says with FDA approval. I have no idea what that means. I am not following this symbol. I probably will not do I mean, it's a biotech. It's moving up. So it's up 38%. Probably with FDA approval, that's probably justified. It's not something I'm going to cover. It's not something I think that needs to be, out there. If you have ideas about FDA approval and you know that this thing's going to get FDA approval, first off, that might be insider trading because nobody knows about FDA approval. But it's a strong buy in the Wall Street to quant hold. Right now, the buy price is 211 underrating offering of stock. That's today. Yeah. Underwritten offering of common stock. I mean, did they just dilute people and it went up 39%? I have no idea. Gets FDA accelerated approval. This was on Friday. For advanced melanoma therapy. Good. Again, trade it. I don't particularly know anything about this. Pavan wanted me to review the Capital One deal. That was already in there. Bill from Spotify asked me to look at Take-Two, TTWO, and Square, which is really pissing him off. Very small positions. Bill, Take-Two, this one ran up. And right now I wouldn't buy it. I mean, there's some issues here. I don't know what they are. But that stock chart indicates to me there's some issues. Its all-time highs are back here at 205. You're hovering right around the 200-day. If you like this company, if you play the video games, buy it. Algorithm says don't buy it, but short term it looks weak. Long term, I mean, it's around the 200-day. If you think it's going to continue to grow and you think you're going to see this 50-day go up, it's probably not a bad one. Take-Two. But again, I would point you towards my newsletter to do your own research on this. Take-Two, it's down 0.00. It's a hold from the quant, buy from Wall Street analyst. If we go and we look at the ratings here, and we look at the Wall Street analyst, and we look at the price target, you can see the low is 130, and we're trading at, 153. Average is 175. Again, we're trading at 153, but they've been bringing their price targets down. So not great for me. Not a great look. Square, I do own Square. Square is just trading along with PayPal and the other fintechs. It's just expensive. I mean, the valuation is just expensive, and it's going to continue to come down. Square or Block, Visa, Vaz, Vase, whatever. Its price target, $80. It's trading at 65. The high is 100. Low is 40. Look at that. I mean, this is the same kind of thing. They've been bringing their price targets down to meet the stock. That's it. That's it. I mean, the problem is that it's just a valuation story on this one. Can they make it work? I don't know. How do you like GSTI? GSTI is GSTI. I think this is Goldman Sachs growth. GSTI. Just GSTIX. I assume that may be what you're looking at. I don't know who this is. But this is the growth fund. This is Goldman Sachs growth funds. If you look at the hold, it's Microsoft, Apple, Amazon. I mean, if this is what you're talking about, I would go over here and I'd look at the symbols and I'd take that out. I'd put in QQQ and I'd put in XLK. And let's see how this one performs. Yeah, not great. Not great over 1 year. I mean, you're at 30%. 3 year? Why are you paying Goldman Sachs all that money to lose you 11% over 3 years when QQQ is up 28%? XLK is up 46%. 5 year? Let's see. Maybe they have some long-term benefit. Not really. If this is what you're looking at, 5K, 6 not great. Not great. Let's go over some scans. Energy sector right now is looking pretty good. XOM, which is Exxon, we have a buy at 104. We're trading at 103. Again, from a perspective, we've hit this 200-day before, and I'm completely out of Exxon. I got out of Exxon in December, right at about 104, 102, 104, somewhere in that neighborhood, I think it was. I didn't time it as well as I did last year, where I should have gotten out at 109, but oh well. But that's one. Cleveland Cliffs has a cross up, and this is down 2%. It's under 20 again. I think you buy it under 20. Again, I think if it goes down here to 15, you just start adding to it. I think it's a $20 stock. The problem that you have with Cleveland Cliffs is, when does it actually go back to trading the way it was pre-pandemic? And so if we go back here and we look at pre-pandemic, this is 2018. That was a $13 stock. And so you're using that as its support. Does it ever break that support? This is a company that is raising prices and wants to buy U.S. Steel. I mean, I think it's a good company. I like it. I have it in the core portfolio. I think it's under 20, you buy. Over 20, I think you sell it. I think you just take your profits. Target. It finally hit 150. It's trading at 149.99. We had a buy in here at 143. It's just another move up. The ex-dividend date you hit. Their earnings are coming up March 4th. Interesting because, again, Walmart, they are up. Walmart is up 5% today on their earnings. Can Target pull it back? PayPal. I'm done with PayPal. I'm just waiting when to sell it. This one is down 1% at 58. I was hoping to sell it at 60. It just doesn't seem to get out of its own way. Snap. Way to cross up on Snap. Snap is, Snapchat. This one after earnings just got crushed. Absolutely crushed. This is interesting because 2 earnings ago, they got crushed. They absolutely went down to $9. And then what happened? They soared up here to $16. Could that be happening again? Potentially. Very well, potentially. JEPI, CVX, which is Chevron, PXD, XLV, healthcare. I talked about healthcare, kind of making a move back. I am out of UNH. UNH was down. I sold it when it was at 550, 560. It's at 523. But XLV has had quite a move. I mean, from 140 to 145 in a spider sector, that's a pretty decent move. This one over the algorithm makes you 11% versus the just buying and holding makes you 13% over 2 years. So it hasn't been a bad sector at all. BRKB, BRKA, I think, is the one that actually got its all-time high. And that's the one that's at 500,000 or something. This is BRKB. And this one, another cross up. I mean, you're just continuing to go up with another cross up here. Your RSI is 76. Am I buying this one? No. It's just a little too high. Bank of New York was one, BK. And this isn't the one that's in trouble. There's another Bank of New York that I think is in trouble that crashed down and coming back. This one has just been a solid player. I mean, look, that 31% and you've capitulated here. This one could be making a move higher, 55.15. Now, if we go over here to Seeking Alpha and we look at Bank of New York, we can see, let's go and look at the ratings. Strong buy. This might be an opportunity for you. Wall Street analyst ratings. If we go and we look at this, price target, average 61.82 right now. So you're trading at $54. The average price target is 61.82. Take a look at this. It's below. I mean, this one might be a good one to actually trade. So might be an opportunity for you. And the algorithm says get in. Now, the algorithm on this one makes you 1.6% versus losing 5% on the actual buy and hold over 2 years. If we look at a weekly, where are you on the weekly? You might have a little bit of upside, but you're kind of curling over. I'd be a little bit careful because long-term on this one, it does look like it might turn over. I would say if you get to the 51 or 52 level on this, you take the trade. I mean, just look, pre-pandemic, if we go back here to pre-pandemic, this was a $50 stock. It got all the way up here to 62. Maybe it's going to 62 again. Let's see, BK. Let's go over here. And look, the average price target, 61.94. The PE, not crazy. Not crazy at all. Dividend, 1.75. Not nuts. You're 3% below your 52-week high at 56. Again, the price target is 62. Most recently, these guys moved it from 52 to 62. That was Morgan Stanley. JP Morgan in December said 54, 56. You're trading right around the $54. Now, if you're looking at insiders, these are just, they're selling it around 54, 55. Nothing huge. Again, this is a big bank. It's not a major bank, but it's a decent-sized bank. So you do have to worry about real estate stuff. But again, I've got some REITs in there. So, okay. No mention about affiliates. If you want any of the links, they are here in the link tree, linktr.ee/daily stock pick. Remember the newsletter. It is free. Again, this is, if you want to look at stocks, this is just a blueprint on how to look at stocks. So, okay, I got a lot of editing to do because poor little puppy had a seizure. So I will talk to you guys tomorrow. Remember, tomorrow after the bell is the big one. Watch Palo Alto Networks today. I think that will be a tell on CrowdStrike and others too. I think maybe if it starts to pull back and you see a pullback in CrowdStrike, that might be an opportunity to get in. Okay, see you, bye. Man, I got a lot of editing to do. Poor little puppy. Let's see. Lunar. Lunar's up. Brandon's got another winner on his hands. Wow, it's up 25%. Dude, you just have this knack for getting in at times on some of these. That was a good one. Uber under 80 here. Let's go up and down this. Amazon under 170. Get Amazon. Cleveland Cliffs down 2%. Again, like I said, under 20. Coke is at 60. Microsoft under 400. Just get in. Nvidia under 700. It's down 5%. The downside is just big. I mean, it's going to get dragged down. If this goes to 650, I mean, that shelf right there at 630, I think you could be going down there. It's putting in a night. Let's see. Let's put in, before we're going to put it in here, the last earnings. We'll put the volume at the last earnings. Where are most people holding? They're not holding up here. This was just the last earnings. If this doesn't, that 500 right there, I think this 628, 630, I think that's where you want to load up if it gets down there. So, PANW is down 1%. I don't care. That's a good enough stock that it's expensive. Roblox almost under 40. It's at 41.65. SMCI 760. 760 SMCI. I told you, let's wait to see how this one opens up. I'm going to look at extended hours because I want to look at the 5-minute on this one. This is a 5-minute display extended. It's going to show a sell-off at open because what happens on this one, and I think it's a lot of retail trading. I think what happened here was you opened up and you just shot down. What happened here is you got closer was people started to panic and they start panic selling. And you still haven't regained confirmation here. Again, look at how low this MACD got during this first one. It never really got down that low. The RSI was down here. It got overbought here when it was trading at 828. Got overbought. And then it quickly just comes down. You're making lower highs. So if you just take the start of the sell-off here, right here, this is your trend line. I mean, you're hitting 3 points. That's your trend line. So you may come back up here to 793. Probably not a bad trade, but give it time to cool off. Yeah. Let's see. Tesla 193. I think that one's going to have Uber under 80. Just get Uber under 80. Walmart up 5%. I own a little bit of this. How much do I own? Like 15,000, 20,000 of this. It was an initial play. Let's see. What's that? What is this? Hold on one second. I don't know what that is. It was updated. See below for details. Huh. I don't know what that is. Huh. Let's see. Let's go over here. I'll look at Old Dominion. I'm going to be way down, I have a feeling. Let's see. Yupper. I'm way down. Let's see. All positions. I'm going to go down to Walmart. Walmart. I have it's only $9,000. Cost was $1,000. I think I trimmed it. I did not like heading into this earnings that double But I did say, remember that gap that I said, hey, this earnings, it's going to fill that gap, filled it, doubled it, all-time highs. Yeah. That's it. That's a chart right there. That's a chart. OLDF. ODFL. Old Dominion. Algorithm does not trade well on this one. You make 47%. Over 2 years, algorithm only makes you 13%. That's probably because it's fairly sideways trading. It hasn't been bad. I mean, just hasn't had enough ups and downs to get you in and out, but not bad. You are trading at a fairly expensive price, I would think. ODFL. That's a big PE for a freaking railroad. 37 and 27 PE. I mean, I know they print cash, but average target price 415. You're trading at 417. 52-week high up there. January 8th, Susquehanna didn't put a price target in. November, Deutsche Bank moved it down to 386. Insiders selling at 390, 411, and you're at 417. ODFL. I think that the valuation is just what. Yeah, valuation F, revisions C. Ranked 14 in industrials. Yellow Corporation is higher. I mean, just industrials as a whole don't get much love from this quant. Rider systems. So if we go back and let's look at some of the Wall Street analysts here. See, average price target is 409, high is 515, low is 294. You still got 1% downside for that. And it's traded right along there with it. So I don't think it's crazy, but I don't want to get in. I mean, this just does. There's nothing about this that excites me. But oh yeah. LTL. You're in that freight business. LTL is only this ProShares, Ultra Communication Services. AMZN. CRNT. What is CRNT? Ceragon Networks. Down 2%. Strong buy from Wall Street. It's well under the price target of 563. But that might be an outdated price target. Oh. That's a big valuation to pay for a freight line, though. That's my only problem with it, Brandon. CRNT, I mean... This is... Ceragon Networks has a market cap of $235 million, and there's probably not a whole hell of a lot of people that cover this one. I mean, it's not very big. It's an Israeli company, so Yeah. I don't know. Your guess is as good as mine, John. When you don't have a large, this is why I trade in large caps, because you can immediately, there's news, there's analysis, there's stuff. This is why the small caps don't interest me at all. I mean, you can make money in them, but it just doesn't get covered. So, yeah, and the 5-minute chart on SMCI is interesting. The 4-hour chart says, hey, get out. The 5-minute chart, take a look. Here, I'm going to actually remove all annotations. You're welcome, John. Yeah. SMCI is what everybody wants to talk about. Everybody wants to look at. Where's it going? Your guess is as good as mine. Here's the thing that you have to look at. From a 5-minute standpoint, and again, this doesn't include after hours because after hours is super, super volatile, and it's not, in my mind, it's not significant. You want to look what this is doing during the hours, and during the trading hours, and it just doesn't have confirmation. When you bring this back and we go and look at a 4-hour, we can see it's turning over. Again, you've lost confirmation. This is the first time in this run that you've lost confirmation. So where would we get back to? Well, if we bring this volume price back to kind of where we started this, you can look, because 316, again, getting that gap up to 343 was a big deal. If you bring it there, then the VWAP is down at 617. I would expect you to get some resistance here at 680, but I would expect you to get down to the low sixes. If you get below into a 5 handle, that comes down to 486. And that's what you have to look at is, where is this? Now look, the volume is starting to turn over. So there's a huge, huge difference between momentum stock that has lost momentum and it's going to the downside. That's all this is. You look at a weekly chart. I think this has, the weekly chart. It had a shooting star candle. But look at those Bollinger Bands. They're too wide. The last time the Bollinger Band expanded from here, you went from 144 to 300. Now, again, NVIDIA trading, NVIDIA is going to drive this. So that's what's going to drive this completely. But yeah, SMCI, I wouldn't. I mean, I'm currently holding, let's see. And I should actually get out based on some tax situations that have popped up over this week. But SMCI, I am holding, let's see, today I am down $1,500. I could have saved myself $1,500. I am up 180% even if I sell it right now at 750. So it has to get down to, let me see, average cost 268. And I don't think it's going down there. So I will add to my position in my retirement account and keep that when we have confirmation. I will keep that 268 and I will let that get into long term. Again, it's about building a plan. You know what I do want to look at? I want to look at Builders Resources, BLDR. Because this is one that I think I'm going to add to. Nah, Sherry, here's the thing. I'm playing with house money and the tax situation. Remember, my situation is not your situation. So there are tax implications with selling that large amount of stock. And it comes to, I don't want it to get the tax implication. I can't sell it all. I've already sold out of my retirement account, but I can't sell that because I have a plan and I'm sticking to it. Now, it's not me being hard-headed. It has more downside. Yes, it has more downside. But we're talking, 6 figures there. You don't change your year end in February, tax situation. So it's a little bit hard to say sell it. If I didn't have a plan, well, let me put it this way. If I didn't have a plan, I'd sell it. There's no reason not to hold on to it. I sold out of it completely in retirement accounts. There were 4 friends that I had that I communicated with. I said, sell it, get rid of it on Friday. We all got rid of it at about between $8.20 and $8.50. But you can't, I can't sell that. And yes, I'm going to lose money. I will probably make more money by selling it today. But the plan is to trade around this and to have that stock in there. I think that it gets back to where it was. I think it gets included in the S&P. And I think, I think, the plan that I have makes sense because there's other things involved. There's healthcare subsidy implications. There are, being able to have money in the bank implications. There are tax implications. It just comes down to if I sell that, and I need to sell other stocks in my portfolio in order to, have some stuff. Then we're talking about the potential of, 36% taxes. I might have to pay 36% taxes instead of 15%. So even with the downside, I think it's still worth it. But I could get screwed and it could go back down to $250 per share. I just don't think that that's going to happen. This one's interesting because I do want to put this on a Wall Street analyst ratings. 2% upside to the 185. That's not great. Boy, look at that, man. When this was trading at 110, let's see. %14 upside. Wow. Century Communities. 11% upside. I want to be, I wonder if there's a search. Let me see. Stock screener. Create new screen. No, I guess there's no valuation. Advanced filters, let's see. Ratings. There we go. Okay. We're going to include that. Oh, it doesn't give me. No. See you, Sherry. By the way, I hope I didn't yell at you, Sherry. I didn't mean to if I did. My puppy has had... I've had a morning. Let's just say that. I'm looking for company details, market cap, trading, quant factors, dividend grades. I don't care about that. Valuation, earnings, revenue surprises, performance, momentum, profitability, risk. Good. I'm glad I didn't mean to. Thank you. Hung. Welcome, Hung. I think it's been a while. Oh, God. I got to sneeze. Excuse me. Woo, 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 woo. Okay, I'm going to edit this. I guess I can't look at it. Oh, recession times by summer. How are you doing, Hong? $7.36 now. We're on the downward slide. Downward slide. That's awesome, Hung. Hung, high five. Boom. That's awesome. Yeah, it's been a while. You're an OG, Hung. Lunar. Oh, God. I'm afraid to look. Jesus, it just keeps going. I mean, look at that volume. I don't see a huge volume on this current candle, although it is higher than most. Let's look at a 5-minute. My 5-minute is usually what I look at. You're seeing it gap up. The problem, oh God. Here, I'm going to include extended hours because I do want to see how it, because this is, okay, so here's the 5-minute. And Brandon, we've gone over confirmation. You're a paid newsletter subscriber, so I know you know that. This is the first candle that has absolute confirmation. I would probably wait to see if you don't top this candle at 10:23. In fact, I think you could get in right now. I'd put in an order for $10. And if it hits on this candle, great. Because I think we can sit and watch it. The volume is declining. I mean, here, this is your volume down here. So you're seeing the open, it just ran. But you're seeing the decline. Now, this current candle hasn't formed the whole volume shelf yet. But I am seeing that go down, and I'm seeing a divergence here. Oh, I don't want that one. I want this one. I'm seeing the divergence here where that's going up, your RSI. But yeah, you broke that top of 1023. Buy it at 1035. I think you look for about 1060. And then just scalp it. Just freaking scalp it. That's awesome, Hung. Have I told you about SMCI, Hung? I've got this new investment opportunity for you. It's just come across my desk. That's it. That's awesome, Hung. See, and Brandon, what did I tell you? Buy at 1030. I think you're going to hit that 1060. I think you just take your profits. But so here, and I'm not very good at this. Full disclosure, I am okay at this. But when you see that confirmation and you see that absolute confirmation, and now we're starting the next candle, which is red, which is obvious, as long as you don't go below the $9.90, then you should still have an upward movement in this stock. Whether it's red, whether it's green, whatever it is, as long as you still don't hit this low, then you should still see an upward movement in this stock. And take this. See how you broke that low down there? You're moving down. But then you had this inside candle, which traded inside this previous candle. And then you didn't break that low. You didn't break this low. You finally gained confirmation here at 934. And you've got confirmation even on this red candle. It's an inside candle. Inside candles typically indicate a reversal, but not always. And I shouldn't say typically, but they can indicate a reversal. So you wanted to be careful here. Could have taken your profits, could have, gotten out, but you were rewarded with this nice big one. You don't have an inside candle because you've already traded out the top here. So again, you want to take a look at the candlesticks. And now let me go over Amazon for Hung. So here's Amazon Hung. It's a little weak. I would expect this to get back to about 160. So about $6 below this for the short term. Long term, man, I think you're still fine. I mean, I've gone over this one for a long time. I think you're fine. See ya, Hung. Okay. I'm going to get out of here with that. Brandon, go trade your lunar. I think it's a good one. I think it's still going. Just remember those candlesticks are important ones. Inside candles typically indicate I shouldn't even say typically. Inside candles sometimes indicate a reversal. So understand that. Understand confirmation. Understand where your MACD is. Understand where your RSI is. And trade it on a 5-minute. And don't be afraid to take 1% and 2% profits. 10%. 10% is a total. It's not, you don't have to make 10% every single time. Don't be afraid to take 1% and wait for a little pullback. And when you see it, confirm. Part of the theory of trading is to not force stuff. And you hear people say this all the time. I want to make sure that I am 60%. It never feels comfortable to buy in, but I want to make sure that I'm 60% sure that I'm going to make money. And by looking at candlesticks and finding momentum, you can. Even on this, a 4-hour. I mean, take a look. So you didn't, here. This is the bottom. You had confirmation here. You didn't touch the bottom there. You didn't touch the bottom here. You didn't touch the bottom here. Look, you broke the bottom there. And then the trend started to go down. But then all of a sudden, you have this upward trend. It didn't touch the bottom. So you want to find that where it doesn't touch the bottom. You touch the bottom here, you could have gotten out, but you could get back in. And there's nothing to say that you couldn't get back in, and you've got this run. And then you touch here. This one, you touched the bottom and you lost it. Hopefully you got out, but you had another opportunity to get in. So don't be afraid. You don't have to win 100% of the time. You don't even have to win 50% of the time. You have to win enough percentage-wise to make, $1.01 on $1. That's all you have to do. And it's about compounding that and making sure that you're just smart about it. If the trade doesn't feel comfortable, you don't take it. And that's why I don't day trade a lot, is because I'm too stressed. I mean, $10 in a stock is going to drive me nuts. So, SMCI. Let's take a look at SMCI so we can see, on a 5-minute chart, where am I getting in? Am I getting in? That's going to be the question. You're down at 725. Doesn't have confirmation, and you're continuing beating out the bottom on this one. And yes, the RSI is at 21. Doesn't matter. It can go lower. It can stay down there. So understand your charts, understand your fundamentals, and you'll be fine. I mean, it's not that hard to do this stuff. It is incredibly hard to play the psychology game. But if you create rules and you have a system and that system works, I just, I don't think that it's that hard. But creating the system and doing that kind of stuff is tough. So, okay, I'm out of here. You guys have a great day. I will see you tomorrow. Bye.